The U.S. Court of International Trade recently issued a ruling blocking a large number of Trump's tariffs that he announced during Liberation Day, when he launched wide-reaching tariffs on every U.S. trading partner. In this video, we're going to review why the tariffs are being blocked, which industries stand to benefit, and what it means for investors in the stock markets. Taking a step back, Trump announced tariffs on a variety of countries. There was set to be a baseline 10% tariff on nearly all imported goods, a higher reciprocal tariff targeting specific countries with significant trade surpluses with the United States. These included rates such as 34% for China, 20% for the European Union, and 24% for Japan. And if you recall, earlier in the year, Trump was starting things off by placing a 25% tariff on most imports from Mexico and Canada. All these broad tariffs were justified by using the International Emergency Economic Powers Act, or the IIPR. Ultimately, the Court of International Trade found that Trump's interpretation and usage of this law was unconstitutional. In many cases, the president should have to get congressional approval to implement new tariffs. And the court determined that the IIPR does not give the president unilateral power to threaten tariffs as he pleases. So all the tariffs we mentioned earlier have officially been struck down. It's likely that the Trump administration will try to appeal this decision. They already are looking to potentially see if the Supreme Court will reverse the trade court's decision. It's crucial to remember that this is not the same law that was used to justify the 25% tariffs on steel, aluminum, and automobiles. That's Section 232 of the Trade Expansion Act, so those tariffs will remain in place. The U.S. stock market futures were up 1 to 2% before the market opened because of this news on the day that it happened. The market made it quite clear that it does not like tariffs, if that wasn't already apparent enough. The immediate implications of this decision from the courts is that we could see greater product pricing stability because businesses won't constantly need to respond to the threat of impending tariffs. Now, tariffs are something that Trump's been using as a bargaining tool with other countries. Well, this is becoming a problem when trying to determine how you should make investments as a business. You really have no idea if these tariffs are going to stick or not. We could also see further reductions in inflationary pressures, which have already been dropping substantially, but tariffs were obviously going to raise prices if they went into effect. Now, we've avoided that for now, as things stand. Whether you agree with tariffs or not, I personally don't think that they were going to work. I can appreciate the idea of trying to bring high-paying jobs back to the United States, but the way in which Trump has been using tariffs is problematic. Now, using tariffs like this as a bargaining chip to get countries to do what you want leaves businesses in a state of limbo as they don't know what tariffs are going to stick around or suddenly disappear. You can't make long-term business decisions, like making investments to bring manufacturing back to the United States, if you're unsure if the tariffs are going to last. So, regardless of the merits, I think Trump has been too wishy-washy to actually get corporations to assume the tariffs will be around years from now. That ultimately means that they will not make the investments necessary to bring jobs back to the U.S., and I have significant doubts that tariffs will do anything but just hurt the economy in the way the administration has been using them so far. There are potential alternative options for Trump to implement tariffs in different ways, so I'm not sure that tariff threats are going to go away, even if the IIPR is nullified. As you can see on the screen, we already know of at least 3 to 4 different sections and bills that Trump could use to implement new tariffs. If Trump wants to incentivize new manufacturing capacity domestically, he could also go the Biden route and create tax incentives or subsidies, but he'll very likely just announce new tariffs under another law if the appeals don't go his way. And as I was in the process of making this video, the appeals did, in fact, go his way. The blockage of Trump's tariffs has been temporarily halted by the appeals courts. So this is going to get worked out over time. I'm ultimately going to assume that Trump will eventually put tariffs back on, one way or another. So that's probably how we should position ourselves. And how does this affect investors? Obviously the market does not appreciate tariffs at all, or the uncertainty. And if we assume tariffs are going to stay on for the next few years at least, then the big winners are going to be companies producing goods domestically. At the very least, companies with manufacturing capacity outside of unfriendly nations like China. So if we're looking for winners in an era where the US will presumably have tariffs for years to come, you're looking at sectors like domestic steel and aluminum, which is just the first example. US Steel, ticker X, which Nippon could be buying out pretty soon. And Nucor, ticker NUE, is another large steel producer domestically. In terms of aluminum, you're looking at companies like Century Aluminum, ticker CENX, or Alcoa Corporation, ticker AA. They both operate most of the remaining aluminum smelters in the United States. But we have to be careful even with companies like this that have domestic production. Alcoa, for example, is expected to pay an additional $90 million in the second quarter for the raw material required to smelt aluminum, all thanks to the tariffs, because it's imported from Canada. So even companies that in theory should benefit from the tariffs end up getting hurt by them if there's no domestic sources of supplies across the supply chain itself. Other potential beneficiaries are companies like Tesla that focus on developing domestic manufacturing capabilities, semiconductor companies that operate in the United States. Intel would theoretically be a good choice, but that company has had a variety of problems over the past few years, so that would be a turnaround play if anything. Overall, I'm not personally a big fan of any of the immediate potential winners. They operate in extremely capital-intensive industries full of competition. So my focus is probably just going to be looking at companies that are largely unaffected by the tariffs entirely, either operating outside of the commoditized sectors or dealing with financial instruments, softwares, things of that nature. Low capital commitments and products that will not be harmed by tariffs either way. In terms of which industries lose when tariffs remain in place, basically anything that relies on importing supplies. Construction materials, consumer electronics, most of the automotive industry, even sectors that don't directly deal with imports will likely be negatively affected because other countries like China are going to hit the US with retaliatory tariffs like they were over the last month. So things like agriculture companies will suffer from that aspect if things aren't sorted out with China. International transportation companies are hurt as well by declining trade and cargo volumes. Less international shipping and more production in the United States means fewer things being traded and thus transported. This is why the economy hates tariffs so much. It affects so many different industries, and it's somewhat difficult to find ones that are not hurt by what the Trump administration is doing. That pain can be stomached if we are at least sure that it's going to have the intended effect, bringing manufacturing back to the US. But as I mentioned earlier, it's difficult to see that happening when Trump does not have consistent messaging on which tariffs will stay around. Ultimately, it might be too early to make any investment decisions when it's too soon to tell how all this will play out. If the tariffs do end up getting canceled or Trump backs off, then the opposite of everything I just said will be true. Companies reliant on imports will get some reprieve as prices stabilize. Now, with all that said, I do think there are some clear winners that could be interesting regardless of whether the tariffs stay or go. The production of critical metals outside of China is a clear example. It's obvious that the United States' reliance on the Chinese for crucial commodities like copper, graphite, rare earth metals, and other commodities used in a variety of critical products is becoming a problem. That is something that both sides of the political spectrum can agree on, so this move will continue regardless of what happens with these tariffs. There are clear incentives to get new mines, processing operations, and other material production outside of China. The Chinese dominate the West supply chains as of right now. So any new mines or facilities outside of China are likely to receive aid from the US government and other governments around the world. That's likely what I'm going to talk about in my next video about some of the restrictions China is placing on rare earth metals. Stay tuned for that. With that said, if you'd like to stay up to date about these significant market-moving events like this and learn about different potential investment opportunities to take advantage of them, then subscribe to this YouTube channel and check out my new Substack, links in the description. Thanks for watching.